Hey, good morning. Boom, 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 boom. Boom, 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 boom. Bum, 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 bum. G'day, mate. How are ya? How's your mum? We still have like 2 minutes to go, don't we? Hey, please show some love and respect for FX Street hosting us today. Click the thumbs up. Not for me, but for them. All right, should we go? I guess we could. The music seems appropriate. Jimmy wants to do gold. Why don't we start with that? Tell me what you want me to cover. Tell me what you want me to focus on today. What's your number one? JC says gold. What's on your mind? Thank you, JC. I guess I could say J-Che. It's gonna sell. Oh, wow. Okay. Good morning, Maida. The Midas touch. May the force be with you. Raymond, man, I've been thinking about you lately. Good to see you. How's the chromium world treating you? It's hot. It's hot and dusty. Yeah, well, you belong on our team, Raymond. You might be a major miner, but you're a major trader in our mind. Good morning. Morning, moderator. Tanzania. Nice. Yeah, well, we got to remedy that, Raymond. Yeah, where are you guys from? I'm in beautiful Atlanta, Georgia. Beautiful, sunny, clear day. Frigid cold. 2025 is going to be a good year, yeah. Dallas, UK. I think I'm probably going to make it to London a couple of times this year. That's what I think. It's hot, really? It's hot? Yeah. Look at that, Nigeria, Mozambique, Tanzania. Yeah. They say better than Burundi. I guess we should get going. Devon, UK. Yeah, that's interesting. Sudan, north or south? All right, good morning, everybody. Welcome to the International Association of Retired Supermodels. Wait, wrong webinar. Welcome to FXStreet Trade Non-Farm. Welcome to FXStreet Trade Non-Farm Payrolls Live. Number 224. If you are adding that up, that's well over 18 and a half years that I've been doing this monthly webinar with FXStreet. Hey, that's pretty cool. So thank you for being here. Thank you for showing your loyalty to me, but also to FXStreet. If you'd be so kind and show some respect to our hosts and to our moderator by clicking the thumbs up button, I'd appreciate that. Today we're going to do technical and fundamental analysis with the overall goal of planning our trades in advance because trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Yeah, North Sudan, so much better. Yeah, beautiful sunny sun, 77 in Panama. Panama, very good. So anyways, I hope you're having a wonderful day. As we say in Western Canada, Jambo. May your life be less difficult than usual. Yeah, cool. So anyways, good to see you, everybody. We're going to have a ton of fun. Today we will do technical and fundamental analysis. So using my platform at traders.com, we're going to look at some fundamentals today to try to discern what the heck's going on with NFP. The two big ones, of course, are the revision from last month's 12K print, which is obviously not correct. Don't get mad at me, Meta. But it could be the strikes, it could be the hurricanes. The other thing is the unemployment rate. Yeah, what is the unemployment rate? Remember, completely different methodologies. But my name is Wayne McDonell. I've been around. I've done a bunch of things. I manage endowments for charity. I run traders.com. I'm the leader of our community, which is cool. I wrote a book back in 2008. It sold a bajillion copies and was the #1 selling Forex book in the world 3 days before it even became available. So many people bought it on Amazon.com before it was even shipping. So it opened at #1, which was kind of cool. So thank you for that. That's kind of cool. It's also received reviews on Amazon.com as the worst book ever written. And I'm like, dude, that's no easy feat. I mean, that's got to be some sort of accomplishment. Like, nobody has written a worse book ever? Holy smokes, like that is something. That is something. Oh my goodness. So anyways, that was my first book. I plan on writing other books. Maybe I can beat that record and write a worse book. I could have the #1 and #2 worst books ever written. So I have lofty goals. Yeah. Yeah, my favorite, Brian, is the guy actually wrote that he was at a bookstore. He pulled it off the shelf. He read it, didn't like it, put it back, and then left a negative review on Amazon.com. And Amazon's like, yeah, we're cool with that. Whatever. Yeah. Yeah. So anyway, I've been around and I've done a couple of things. I've made a lot of mistakes as a trader. So I can share some of those mistakes obviously with trying to help you avoid those mistakes. I've learned a few things to do. I've learned a few tricks of the trade. Okay. Which book? How about the book we're looking at on the screen? That one. Okay. Okay. Yeah. So I'll show you some sort of like best practices. Really, like, I don't have any like specific like trading strategy that's better than everybody else's trading strategy. I think there's just a proper way to trade. That's it. Like, you either know how to trade or you don't. We can disagree on the precise methodology, but what works, works. You can use different oscillators, different moving averages. All that doesn't matter. I mean, it does matter, but it doesn't matter which ones. Like, my tools are not better than everyone else's tools. There's one way to trade, in my opinion. The general methodology of trading is what I'll teach you. And we could have 10, successful traders, and they might all have different types of charts and different types of time frames and different kind of tools. But one way or another, we all do the same thing. And that's what I'm talking about. Just understanding how the market moves and how to make decisions. And the rest is personality, right? Cult of personality after that. And so I can help you build good best practices, both fundamentally and technically. I have a degree in macroeconomics from a little private school in Cambridge, Massachusetts. You probably haven't heard of it. It's Harvard. I also went on to get a master's degree in financial management, also from Harvard. I studied algorithmic trading at Oxford. I studied cryptocurrencies at MIT. My professor was Gary Gensler, who is now looking for a job. I studied alternative investing at Harvard Business School. All that is postgraduate work. So I have enough education to pass the test. Cool. So let me know how it can help. Also, my background is in venture capital. So I was a venture capitalist when I ran into a thing called Forex, and it blew me away because I was looking for $100 million a year opportunities. And I learned in an article that Forex at that time, 25 years ago, was $2 trillion a day. And I'm like, whoa, 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 whoa. I'm looking for $100 million a year opportunities. And there's an opportunity in front of me that's $2 trillion a day. That can't be true. I looked it up. It's true. I quit my job. So many of you got into Forex and trading and investing because you had a crappy job and you're like, now I want to go on my own. I had a great job. I was super happy. Right? I was super happy. I had 2 assistants scheduling my appointments for me. I basically, it was Shark Tank. I would listen to 5 pitches a day, 4 to 5, sometimes 6. And once I found deals, I'd fly in the entrepreneurs, I'd get their prototypes, and then I had a marketing research assistant who would do all that kind of stuff. And I'd fly the entrepreneur in and interview them. And if I decided I wanted to invest, then I would put together a pitch deck on the deal. And then I would pitch it to our investment committee and give them reasons why we should put money towards it. Like, it was a really cool job. I gave up something. I thought it was at the peak of my career. Yeah. But now for 25 years. I've been in the financial markets, which is really cool, and I am super happy. And now, like I said, after all these years, I manage endowments for charity, and I do it pro bono, of course. Cool. Right on, right? So if you like stocks, commodities, cryptos, Forex, yeah, iruntraders.com. What's the elevator pitch here? It's a Bloomberg terminal for retail traders. And the other pitch is it takes you from amateur trader that makes uninformed decisions and trades randomly using technical analysis, and it gives you the ability to trade as if you are an institutional investor with $1 billion under management, an entire staff that's doing fundamental analysis, technical analysis, and market sentiment, incorporating things like volatility, seasonality, fundamentals, economics, okay, trading patterns, all of this inside, right? Plus a team of performance coaching, 5 hours a day. Yeah. So that's what we do. That's pretty cool, man. That's pretty cool. And so we help you do all your fundamental and technical and market, like, again, like volatility and sentiment. We help you do all that research and incorporate that into your trading plans every day. So every single trade you make is based on logic with impeccable timing. And you have, like me, as your chief economist on your team. How about that? Pretty neat, right? Yeah. Looks like Google's slow today. Happens. Yeah, you can see it's still loading. So anyways, strategically, okay, we gather this data from places like the Federal Reserve Bank, the OECD, the IMF, the World Bank. We pull that data directly out of their databases. So we have millions and millions of tables. And we also pull in live price feeds and build databases of patterns, which include millions of candlesticks, to do incredible levels of analysis, like calculating in real time implied volatility for every asset, or looking at a calendar of thousands of news events and then calculating volatility before and after each news event for every asset on the planet, and then looking in, if there is volatility, looking inside that volatility for reliable, repeatable patterns. We're doing that for absolutely every little tiny piece of news, so that you only have to focus on the 6 things this week that matter. Like, dude, it's amazing. Okay. So there's your strategy, but you still need execution, right? So I think you need an ECN as a broker. I think you need an ECN. An ECN is different from most brokers. Most brokers put all their clients into a pool, and the clients trade against each other. And then if it's unbalanced, the broker steps in and offsets it with their internal dealing desk, right? And their hedging strategies and all that kind of stuff. An ECN like Trader's Way is different. When you say buy euro dollar, it takes the trade and uses straight through processing. So it goes into the server that's connected multiple liquidity providers and dumps you into the interbanking system. So it might be another retail trader somewhere, but it might be Goldman Sachs on the other side of the trade because you're actually out there where most brokers, they don't actually execute your trades. Your mediocre trade goes against someone's crappy trade. And eventually everybody in the pool loses all their money and therefore the broker keeps it all. So I don't like that model. I like the ECN model. And so anyways, there are not many ECNs, so you need to look around. But I recommend you start with Trader's Way in your due diligence process, and see if they can earn your loyalty and respect. I think when you create your demo account and you get in the back office, you'll find it's nice and clean and organized and simple, fast. And maybe those are things that you like. So, okay, go in here. Let's go through and we'll do some fundamentals. We have about 40 minutes before the event comes out. And we can look at a lot of things fundamentally. We can do the scalping thing. I mean, the technical stuff, I think we can do after, because obviously the technical analysis that exists now may not exist in 45 minutes because the news could, let's say, be a shocker. Let's say it's a shocker. And the market's going to move on the news, not on the pattern. So we'll come back to the patterns later. I'll show you what we got, but this is a singularity in the price-time continuum. So what's been happening for the last, let's say 12 hours may not exist in 45 minutes. You see, so why focus on technicals when the technicals could just be blown away and then we develop a new trend, a new direction, let's say. Okay, so that's why I leave that for later. We might use some implied volatility. All right, so we'll look at implied volatility. We can also look at the pattern of vol, but let's start with the basics here. Okay, 10-year T-note, 4.18. This is really good because we were significantly higher. We were 4.45 quite a while ago. In fact, I'll go over the week in a second. Oil down again, which is great. I'm a bear. How do we join the sessions? Traders.com. If you're talking about those sessions. Okay. We have very high standards. You have to pay money. If you pay money, you're in. All right. So oil's down. I'm a bear. Been a bear for quite some time. And we even discussed it last night in the swing trading group. And it's down. Yeah, so that makes sense to me. We can revisit those charts later today if you guys want to do some oil. Gold has got a little bid today, which is fine. It's okay. That's probably the right direction. It's slow. Somebody here earlier said they think it'll fall and they want me to review the charts and the fundamentals. Yeah, I can do that for you. S&P 500 flat right now. My target for the year was 6,111. And we got 6,080 yesterday, so we're getting closer and closer and closer. How long do I hold trades for? Anywhere from 6 hours to 6 months. Now, if you're talking about my endowment portfolio, forever. Dollar, okay, 106, that's kind of flat, and Bitcoin back down. I was long at 102,500 and I exited crying. And then later last night, it dropped. Not only did it go to 103.5, it dropped to 102.5. Then it dropped to 101.5. Then it dropped to 100. Then 99, 98, 97, 96, 95, 94, 93, 92, 91. I'm like, oh my God. And anyway, so it's come all the way back to 98, but holy schnicker-schnacker. Cool. Okay. Yeah, if you guys want to talk about portfolio construction and endowments and all that kind of stuff, like my balanced portfolio did, let's say, 13% this year with extremely low volatility. Extremely low volatility. Because it's balanced, it's 40% bonds. Now, if I changed it and it was 100% bonds, and because I was willing to accept more risk, we would have done closer to 20. And you're like, but Wayne, the stock market was up 30. Yeah, well, in theoretical money. Okay, you bought Apple at 1,000, now it's 1,200. So in theory, you have $200 profit. That's not what I'm talking about. I'm talking about paid cash in the bank, 20%. Yeah, because again, I manage endowments, and endowments don't really care about the increase in net asset value of your investments. It needs money to live. It needs cash flow, not theoretical appreciation. It's not saving for retirement. So it needs cash. It needs dividends. It needs cash flow. I mean, you need to have $1 million in the bank and 100,000 in cash in your pocket every year, because that becomes your budget. Or if you're retired and grandma's eating cat food because she's got no money, well, you say, oh, well, grandma, don't worry about it. Your stock portfolio is up 20% this year. Yeah, well, she doesn't have any money. So she needs to sell, right? Well, if you do that, eventually grandma could run out of money, especially if you have a downturn in the market, right? Can you imagine? All of a sudden, one year, grandma's 83 years old. The stock market drops by 50%. So now she's got to spend what she still owns. She has to sell low so that she could pay rent and buy food, which now means she's selling low at the worst time, but she's out of time. And then all of a sudden she's 87 and she's run out of money. How would you feel if you were 87 years old, your children have died of old age, you're all alone, your friends have died, your children have died, and you've run out of money? How would you feel? Yes, I fixed that. I did. I fixed it. We'll get there, DSTV. We'll get there. Okay, let's go. Let's go. No, Adele, but it's a mission. I have a purpose in life. So I do that for charity, and I want to do that for retired folks. Okay. All right. I don't think it's me, but Google's slow today, right? Yeah, I'm streaming and still pulling 120. That's okay. That's good enough. So Google is slow today. You remember, this is all a database, right? This isn't like a web page. We actually generate all of this live. But anyways, we take a look at this, risk on, and nothing's happening yet today. How do we calculate this? Okay, week over week. Let's look at the weekly bias. Week over week. Japanese yen down a little bit. That's good. That's a 1. S&P 500 up a little bit, but not enough to make it good. 10-year Treasury yields flat. That's not good or bad. Looking at over 1 million options contracts. 7.5, okay, increase week over week towards calls. They're more bullish than bearish. That's good. That gets a 1. Dollar index is flat week over week. Volatility is flat week over week. Gold is flat week over week. And treasury yields on the short term are down a little bit, and that's good. So it's very moderately, acceptably, moderately risk on. Okay, you see how we do that? Okay, since we met last time, if you look over here on the monthly observation, yen is a half a percent stronger in the last 30 days. Dude, I mean, you can call that a -1, but we can make that a 0, couldn't we? Yeah. S&P 500 is up 4.8% month over month. Treasury yields are down 2.61% month over month. Put call ratio down 10% month over month. Okay. See, good. Okay, good. Oh, bad. Okay, so far everything's good. Dollar strong. That's usually quantitative of risk off. Well, really what we know is this probably has more to do with expected Trump administration policies. So we're like, okay, but that's normally related to risk off. So that's how I'm going to score that. Volatility is way down month over month. That's great. Gold down 3%. That's great. Now, why do I say that's great? Well, many times, and in particular, what's happened over the last, let's say, 5 years, one major driver of gold is hedging inflation. And that's not happening right now. Gold is down, so I measure that good because maybe there's low inflation. I suspect we could have inflation come back, but it really heavily depends on the energy complex. Yeah. So it could, but maybe not next year, right? So we got to work on that. So if oil goes up, then I'm going to buy gold. If oil goes down, I'll probably sell gold. Okay, anyways. And treasury yields are down almost 1 full percent on the 2-year, and that's good. You see how we do this? Very quantitative, right? And so here are the things you might want to buy. Here are the things you might want to sell. And this is invalid because I'm selecting one out of the entire group. It's not broken. Oops, that's the wrong one. Oh, how do I, what that? Okay, no, it's, let's do this one. Reset, there we go. All right, cool. So to see what's going on now, we have scores on the bottom. What are these scores? For that, you go to scorecards. A score is based on interest rates, jobs, inflation, productivity, technical trends, fundamental seasonality, retail positioning, and institutional positioning. When you look at all of these independently and then weight them, you get a score for the asset. Now, if there's two assets like a currency pair, right? Euro versus Aussie, not only does it create a score for Euro and create a score for Aussie, but then it does comparative analysis. And then, okay. Okay, and then based on the comparative analysis, it gives it a score. So you end up with things that are very bullish, and you end up with things that are either, could be very bearish. We don't have anything very bearish, but we have only 1, 2, 3, 4 assets that are bearish. They all happen to be yens. And everything else is neutral, so don't waste your time. Now, you could look through that and combine seasonality with technical trends. So 2 reds make it right. 2 greens make it right. So like DAX is neutral. Okay. DAX is neutral, but seasonally it goes up this time of year, and technically it is going up. So you could filter it and go seasonal technical. Seasonal technical. So you could buy it, you could buy it, you could buy it. Don't do it. Don't do it. You could sell it. Don't do it. You could sell it. You could buy it. You could sell it. You could sell it. You could sell it. Don't do 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 it. So even then it overrides, right? So there's multiple ways you can play this game, but the thing is, it's all quantitative. We're pulling this data, like for example, most of this data we pull from the central bank. Okay? The technical trends and the seasonality we calculate from candlestick data. Now, we don't have a candlestick service, we have price and time. And then we do the calculations and create our own candles. Yeah, cool, right? So then we get to this, and these are the assets. Their scores are on the bottom. So everything on this side of the line, we expect to be up today. Everything to the left have negative scores, and we expect them to be down today. Okay? So let's get rid of Bitcoin because obviously it throws everything off. And everything over here is supposed to be up. So oil's down today, but it has a score too. Do we have a lot of conviction for it going up? No, not really. Nikkei we think should go up. Dow we think should go up. And maybe S&P 500, but S&P 500 is only a 6. Did you know on Monday it was a 9? On Tuesday it was a 10. By Wednesday we dropped it to a 6 because fundamentals and technicals were changing. And we incorporated that in the score. So traders.com is very sensitive. Okay. Now on the left side of this is whether it actually went down or up. And that means like now, not like this week or this month or, you know, what is it actually doing today? So copper's got a score of 5 and it's up, and that's as expected. So bullish expected. Gold, bullish today as expected. Okay, so everything up is expected. Everything down here, Kiwi yen is down, Kiwi CAD is down, Aussie CAD is down, Kiwi dollar is down, Kiwi Swissy is down. So look, all these things are down, but you know what? All these Kiwi pairs have negative scores. They're all expected. That's why it's bearish and expected. So everything here is good. Everything here is good. These might be dips we buy later. These might be rallies we sell later, depending on, obviously, the news and how the market turns out. You guys having fun? This is good, right? Hot money shows some risk on, but we've stabilized. Options market clearly still bullish, leaning heavily to risk on sentiment. Now, there's only 1 million contracts, but on aggregate, okay, cool. Now, what has happened week over week? We'll look at this quickly. Let's do some calculations. Come on, Google Cloud. Gregorama. Greg, has it been a while, Gregory? Maybe I just haven't. Maybe I'm slipping. Yeah, it's been a while then. Yeah, well, good to see you come back, man. All right, this ain't loading. Come on, Google. Let me see if we kick it, if Google will do it. There we go. A little slow, huh? It's been a while since I said I'm sorry. All right. Silver, week over week, 4.4, biggest winner, huh? Silver, copper, platinum, all up. Gold actually flat. Look at the biggest losers. Bitcoin now down 5%. Notice like this is live, just as we've been talking. As Bitcoin's dropped, what, almost $1,000 just since I've been talking. Yeah. Aussie week, Kiwi week, Treasuries week. Yay! Aussie week, Kiwi week, Aussie week. Russell? CAD week, Kiwi week, CAD week. Wow. So commodity currencies are weak, huh? Yeah. Okay. So anyways, that's that. Calendar. This is a simple calendar. I'm going to skip through this pretty quickly. You know what? I'm not even going to show you this one. All right. Later today, we get an update to our commitment of traders report so that we can track the capital stock, capital flow. Okay. So if you wondered why the yen pairs are falling, well, then you didn't know there was a 5% move in institutional positioning that would make every yen pair drop like a ton of bricks. So if you didn't know this, you don't know how to trade. I'm sorry. I know that sounds pretty pissy. Yeah. But like, for example, if you don't know the S&P 500 lost 78,000 bulls and half of them actually sold the S&P 500 for a 9%, well, then you just don't know. Like, why? You're not trading like an institutional investor. You don't understand. You're making things up every day. Especially, even if you give me the answer of like, Wayne, I'm just a scalper. I don't buy that for 2 seconds. You're fooling yourself. You still should know fundamentally how to trade. You should still know what the long-term trends are and why. If you don't know that, amateur. We pull data out of the central banks, but we're not going to do that today. I track seasonality for every asset in the world, not just monthly, but also week over week. And we do this table-wise. So Bitcoin was expected to have an awesome week this week. Oh, you didn't know that? Okay, well, that's your problem. All right, so then we move over to the scorecards, which I already showed you. Somebody asked about gold. What do I think about gold? This is what I think about gold. So I look at GDP, inflation, unemployment, interest rates, money supply, and a whole bunch of other things that we don't even put on here. And we throw them into a scorecard like institutional positioning, retail positioning, seasonality, technical trends, GDP, MPMI, SPMI, retail sales, inflation, employment, and unemployment rate, interest rate differentials, and all of this. And oh my God, we look at all of this and the technical charts. What do I think? Somebody asked me. I think everything. From the conclusion of thinking, which means I just have the data. Look at all of this. Can you see it? Like, for example, this is, where's my drawing tool? My drawing tool is not drawing. All right, there we go. This is the bottom, the trough of the market. So you let it drop like a ton of bricks, and then you buy gold low, and October is less bad, November is less bad, and December is good. So you should have been trading the relative seasonality. See, this is based on 10 years of analyzing gold. So it goes up. Yeah, I already know that. It's in my score. Now, we're also doing statistical analysis of the price time data. It's not really technical. Now, this moving average is technical, so gold is above the moving average, so it's bullish. But also when you do Y equals MX plus B, okay, and then you look at the variance, and then you square it so you have a standardized deviation, and then you do a linear projection based on the M here, which is equal to rise over run, and you do all these calculations, it's a bullish trend, bro. Here's best case scenario, here's worst case scenario, and here's base case scenario. Gold is going up. In a blaze That's a glory. So do not log into a YouTube live stream and ask somebody what their opinion is, especially a YouTube guru. I'll just show you quantitatively and statistically, precisely through data and research and historic analysis, precisely what's happening with macroeconomics. But I don't have an opinion. This is all fact. Now, it doesn't predict the future, but we're doing statistical analysis of the future. This is not a prediction. If you have taken a university class or even a high school class on statistics, you should be able to do this calculation. I've done it by hand. So you either know or you don't know. You're either a professional or you're an amateur. You're either pregnant or you're not pregnant. Cool. And then you can take this further and you can do the statistical analysis for everything you want. Are you a bull or a bear on that? Well, I think I'd like to buy dips. Thank you very much. How about you? Okay, cool. So another thing that we want to look at before we come out is we want to take a look at implied volatility. And we could also look at volatility patterns. Let's let this one load. Google is slow today. I guess we're going to short sell Google, huh? Let's see if we can go. Oh, there, finally pulled it up. Let's do this first then, and then we'll go back to that. This is implied volatility for Friday. It's not specifically this Friday like non-farm payrolls, but if you look at every Friday, okay, so the first thing that you're looking at here is the calendar. Every Friday at this time of day for gold, we calculate how much gold moves hour per hour on average, 4 hour by 4 hour on average, and day-to-day average, but not the daily average, but the rolling average every hour. Hourly range, 4 hour range, daily range, rolling. And the calculation going back many Fridays, okay, shows you how much this asset tends to move. So therefore, that how volatile it is, and it changes over and over and over. So the last 3 hours, okay, are the best time of day to be trading gold. And there's a little blip over here. That's Asia, huh? Yeah. Okay, London. And now we're rolling into New York. And you've already missed the best trades. Yeah, you've already missed them. All right. So how do we use this? Well, implied volatility just shows you range by candle, and then you just average them all up. But it doesn't, it's non-directional. So if you are a bear on gold, okay, you want to sell right in this zone and put your stop above here. Now, why? Because analyzing gold on Fridays on this time of day, it would be very unusual to go higher than this. So that's implied volatility resistance, and then you'd sell and probably target lower like this around, Monday or so. Of course, that keeps changing hour over hour, so, that's not necessarily your target, but that's your direction. And then it's very unusual if you're correct on bearishness. If this market is actually bearish, like you think, based on what this asset's done on this day of the week, it would be very unlikely to go higher than this today. It could, it might, but probably not. Now, if you're a bull and you saw the market more like this, then this is your buy zone today. You put your stop here, and your trade plan is up, 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 up. So again, non-directional, but it helps you decide entries and exits based on Fridays. You see how beautiful that is? Because look, if you're a bull or a bear, then you have a level of clarity to your trading, right? If you're a bull, then what you're trying to do today is not figure out what to do. You're a bull. You buy a higher low. Do you buy a lower low? No. Do you buy a double bottom? You could, but you don't like it. But do you buy higher lows? Yes. Okay, how do we define how low a higher low is, or how low, or how too low? What is too low, or what is good low? Right? How low is low? Well, you can use oscillators, you can use moving averages, you could use pivot points, but you can also use implied volatility to say, well, this time of day, let's say the typical range is 30 pips and it's already dropped 30 pips and you're a bull, and that, if that level of holds, then that is your higher low. And you're like, oh my God, I love that higher low. So you drop into a 1 minute and then you look for your trigger and you take it off the bottom of implied volatility. So now it's an invisible low based on what usually happens. And we update it every hour in real time for every asset, and you don't even have to refresh the page. Cool. Now, everything is high vol right now because it's a market open, but throughout the day, this will change dramatically. And what it will do is say, look at this, not that. So euro yen might be a waste of your time 3 hours from now. But if you don't know that, you're staring at it, but you're staring at the wrong thing. You're betting on the wrong horse. Okay? So anyway, so there's your gold. Here's your silver. Okay? Silver's stuck in a range. Look how normal this is for Fridays this time of day. See, this is the normal 4-hour range. This is the normal 1-hour range. This has nothing to do with these candlesticks. You have to understand, none of these candlesticks impacted this. This is many, 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 many Fridays this time of day for silver. And it's done precisely what is statistically normal. Huh. Well, hell's bells. Okay, no diggity, no Dow. How do you trade this? Well, if you're a bear, you sell this. Okay? And if you're a bull, well, you're a long ways away from entry. Okay, cool. Right on. See how fast this is? How quickly this can save you time? What else do you like trading right now? You like trading NASI? Yeah, stuck in a range. There wasn't even a good price. So there's no real decent opportunity at this price. Aussie dollar, I'm a bear. Okay? There was probably an opportunity earlier today for you on this drop, sell, and now your target's here. Cool. Okay, Bitcoin. So we'll do one more. Bitcoin, just because it was such a mover today. Look at that. Just blew the doors off of it. So that's what happened. But that's statistically very unusual, obviously. And so what's normal on Fridays? That. Oh, we're there in the normal range. We're back to normal. Yeah. So we know that quantitatively. It's not a guess. It's not a projection. Okay. So NFP comes out in 6 minutes, bro. Okay. And so if it's less than 200,000, Aussie dollar up, euro dollar down, pound dollar, no scalp, no spot, only a swing. So don't trade pound dollar. There's a scalp on Kiwi, but no spot, and it's up. What? Aussie up? CAD, Kiwi up, but euro down. USD Swissy up, USD yen up. So what the heck? Okay, so it looks like probably dollar weakness, but this euro dollar is way out of position. 75% chance of dropping, while this has a 75% chance of rising. That is strange. And I don't want to buy Aussie fundamentally, and I don't want to buy Kiwi fundamentally. I'd like to buy pound, but there's no scalp statistically. So to get to this conclusion, guys, we've looked at many NFPs, and we looked at all situations where the actual is less, and then we looked at, did these things produce volatility? So if, like on pound, there's no 2 hour, there's no 4 hour. What does that mean? There's no 12 hour. What does that mean? One of two things. There was no vol on that time frame, or the next step is there was no reliable, repeatable pattern in the volatility. And the weird thing is, when we spot the patterns here, we lack congruency. This says up and this says down. That doesn't make any sense, but that's statistically or quantitatively what has happened in that particular scenario. I'm like, oh, that's weird. And I can show you the charts. So if it's greater than Aussie dollar down, Euro dollar down, pound dollar down, Kiwi dollar down, that is right as rain. So we actually want this to be greater than 200,000, and therefore we start buying dollars and probably selling Aussie and Kiwi first because they are most bearish. Also, I don't like the euro right now. Sorry, Europe. So I don't mind selling that off. So let's take a look. How do we get to these conclusions? You see, again, I'm not making this up. I can prove to you that it's happened in the past. Okay? Greater than expected, it fell in October. Greater than expected, it fell in July. Greater than expected, it fell in June. Greater than expected, it fell in April. Greater than expected, it fell in March. Greater than expected, it fell in February. Greater than expected, it fell in December. I can show you all the charts. I have all the candlestick data. I do not guess. I am well informed because I have traders.com. Do you understand? Like, to do this, there's millions of candles. Millions of candlestick data. Because what we've done is we've looked at all of these events on the calendar, analyzed each one. Is there volatility? Yes or no? If the answer is yes, are there reliable, repeatable patterns inside the volatility? If no, skip it. So if there's no vol, skip it. If there's vol but no pattern, skip it. So now, when we go to this, right? So, right, we have PMI. There's a trade today at 10. NFP in 2 minutes, there's a trade. There's 2 trades on Monday. Nothing on Tuesday worth your time. Forget about it. Wednesday, there's 2 events. Okay, obviously CPI and Bank of Canada. Thursday, okay, and nothing on Friday. The whole future is all planned out based on what? Reliable, repeatable patterns I can prove to you inside volatility that offers you risk or opportunity. Oh my God, right? Yeah. So anyways, let's move over and let's get the news live. Mexican peso tests resistance with all eyes on the U.S. NFP. Euro pound edges lower as sterling performs strongly across the board.
Romania's top court annuls president election results. Euro is practically flat ahead of U.S. payrolls data.
Wall Street poised to open broadly lower.
Czech Republic exempts long-term Bitcoin. Holdings from capital gains tax. Locked and loaded for the November edition of Non-Farm Payrolls.
Silver price forecast. Silver US dollar recovery stalls below 31.45 with NFP data eyed. Bitcoin weekly forecast. Long-awaited 100K milestone meets profit taking.
India keeps rates unchanged. Lowers CRR to boost liquidity.
All right, now we got flashing 56 seconds to NFP. By the way, how did I read the news without my lips moving? Yeah, baby. NFP, NFP. How about 212? What do you guys think? You guys want to guess? We got to watch the unemployment rate. It's probably not going to move. You want to look for the big revision. I think this could be choppy, but a big number. We'll see. 12, 10, 9, 8, 7. Get ready, everybody. 3, 2, 1. What is it? 4.2 on the unemployment rate, so I was correct on that one. U6, 7.8. Wow. I don't see it here. How come it didn't post? There it is, 227. 227, I said 212. Hey, I don't know, is that close enough for the girls? Yeah, what do you think? Hey, that's not bad. 212, 227, that's pretty good. Okay, what was the revision? Anybody? Really, that's it? That's it? That's a shocker. Yeah. Thank you, LE. That's a shocker. Well, even 36 is a shocker. Yeah, Peter posted that, I guess is what it was. It's just that was so low, I wasn't sure what it was. Wow, that doesn't make sense. But you know what? Maida was right. Maida called that out right away. She said, no, that has nothing to do with the hurricanes in Florida. No, that has nothing to do with, I mean, I guess maybe the revision up to 36 was the Boeing strike. But, yeah. Haha. That's so funny. All right, so I got
Non-Farm Payrolls, NOV, has come out. 227K. India keeps rates unchanged, lowers CRR to boost liquidity.
Yeah, it's a little late. How late was that? 2 minutes? All right. So anyways, the team was working on that. That was cool. Did you hear it? It said the NFP came out at 227. Oh.
U6 unemployment rate has come out, 7.8%.
That's a little slow. Unemployment rate, NOV, has come out 6.8%.
Unemployment rate, NOV, has come out 4.2%.
India keeps rates unchanged, lowers CRR to boost liquidity.
Interesting, huh? Yeah, it's a little quirky. Obviously, it'd be better if it said November instead of NOV. Yeah, well, we have to train them. Cool. Yeah, it's a cool sound. Well, I got it from here. YouTube.com/@traders. And we have this video that we created a year ago, I guess. Cool, right? Yeah. So anyways, let's do some technical analysis. All right. So what did I have to go through the settings. So I have all our assets turned on. Okay. But I've turned most of the patterns off. So I'm just saying patterns that haven't occurred yet, but are just maybe forming. So I'm saying, hey, traders, tell me things that might be setting up. So I want to know early. I want to know before it's happened. If you want to know after it's happened, we have a scalping tool for that. And then If we already know the pattern has come to fruition, then we know the likelihood of its success because we can analyze 1,000 similar situations. But when it comes to setting up my trades, I want to know before, not after the opportunity, right? So I want it to do some legwork and then say, hey, Wayne, take a look at this thing. And then I can go to my charts and then I can look for the setup, you see? But I turned off key levels. I turned off consecutive candles. I turned off big movements because if it's already been a big move, it's already happened. And then I know it's going to just do a pullback, but I could probably catch that here. I don't like Fibonacci patterns as much, in particular Gartley's and such. I'm not a big fan, but also those are usually reversal patterns, and I'm not looking for reversal patterns right now. I'm looking for trend patterns. And so I narrow it down to chart patterns that are emerging only. And then for every asset class, pretty much in the world. But I'll show you, so I get these types of patterns. But if I wanted to add Gartley's and other harmonic Fibonacci type patterns, then, you know, I start getting these, like this Gartley emerging, okay? How awesome is this pattern? Not very, in my opinion. I don't like these types of patterns, but I could, I might, like, so I look at it and it's like, okay, it's going to make a low and then a high. All right, well, I'll just catch it when it's doing a trend, you know, like, that's all. So I'm like, I don't like disagree with it. It's just, I don't know if I even want to trade it. You know, I'll wait for the trend to appear. So again, I'm going to override, don't trade ours, don't do those patterns for me. So the way this works is like you work at a multi-billion-dollar hedge fund and you have a staff. One of the people on your staff, on your trading desk, is a technical analyst, and their job is to look at all the major stocks, all the major commodities, all the major stock indices, all the major cryptos, and all the Forex patterns on 5 different time frames, looking for technical patterns, like just technical analysis. And their job is to do that. So that's a total of 7,500 charts. And every day they should whittle this down to the type of opportunities that you like. So I've already said to this person who works on my team, this technical analyst on my team, I'm like, don't give me these big move stuff. Don't give me Gartley's. I'm not interested today. Just give me trend patterns. And so now we've whittled down, you know, so now that person's going to look at 7,500 charts and then only give me trend patterns. Cool. So then I got to go to the next stage because I don't blindly trade any of these, because it's not the technical analyst's job to tell you how to trade. It's the technical analyst's job to do technical analysis and then hand over the ones you're interested in to you to further analyze, and so you can make a trading decision. So I might be a bull on pound and a bear on euro, so that means I would want to sell this. But if I was fundamentally a bull and it said sell it, well, I would ignore it. For example, Kiwi. I don't want to own Kiwi, so what if it gave me a pattern up? Well, so what? I don't want to own Kiwi. What's the problem? Oh, well, there's an arrow on the chart. Dude, are you a boss? Are you a leader or a follower? You're supposed to be a leader. So that's why we do fundamentals up here. So you know whether you want to own Kiwi or, like, I don't want to own Aussie. I want to sell Aussie. So I'm looking for opportunities to sell it. Now, things may change in the future, quantitatively and technically. Well, then the scores will change and my outlook will change. All right. So I have to have all that in mind. None of these are signals. These are patterns that are forming. Okay, great. So let's go through it. I use SWOT analysis as my technique. Strength, weakness, opportunity, threat. It's internal, external analysis. This is what you do in business school. Okay? All right. So this euro pound. Okay, let's do that. Euro pound, strength or weakness? I want you to answer. Don't take 27 seconds to answer strength or weakness. Come on, everybody should answer. What's the problem? Oh, I got a wart on every finger on both hands. Yeah, all right. All right, it's weakness. Okay, so is this an opportunity or a threat? Come on, come on, come on, come on, come on. Go, 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 go. Let's go. Let's go. It's an opportunity. All right, Kiwi yen, strength or weakness? Faster, 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 faster. Weakness, opportunity, or threat? It's an opportunity. Okay, that's a 15-minute chart. Same thing on a 30-minute chart, and it's the same answer. Cool, let's go to the next one. Aussie yen. Strength or weakness? Go, 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 go. Come on, come on, come on, come on, come on, come on, come on. Weakness, opportunity, or threat? I am going to make you a solid trader. That's an opportunity. Mexican peso, strength or weakness? I am going to make you a fantastic trader. Every single trade you make will have impeccable timing and an amazing logic. Okay, this is weakness, opportunity, or threat. Okay, so on and so forth. Let's do another row. See how awesome this is? Remember, I've turned a lot of things off, so these are all easy patterns. The thing is, if you don't know this, you just don't know how to trade. Strength or weakness on USD CAD? Yeah, this one's strength. Opportunity or threat? It's a great opportunity. It came out an hour ago. You've already missed half of it. You got the signal here, and now we're already up here. So, yeah, it's already come and gone. You're about 4 candles late, bro. Where were you? Oh, you were looking at a different chart. You were not looking at 7,500 charts and analyzing each one in real time? Oh, you can't do that? Yes, you can. You subscribe to traders.com. Now you can. Strength, weakness, opportunity, threat. Weakness, opportunity, or threat? Yeah. So the markets are lined up very nicely right now. Unless NFP ruins it, but you can go on and on and on and on. Okay, on and on and on and on. Look at all these. Almost all of them are opportunities, which means you should, if you don't see all these patterns, you're missing it. There's over a dozen opportunities right now just in Forex. Now, some of you might be saying, I don't know what the heck you're talking about, Wayne. So let me remedy that. I got to go back to youtube.com at TradeRs. And when you go to like one of the live, like the videos, for example, let me pull this up. If I go here, download our flashcards for free. All right, so I got to put this here for you. How funny. See, they're struggling.
Employment change NOV has come out. 50.5K.
Why is it reading it again? Oh my God. Yeah, I'm going to have to. No, that's tough technology. So anyways, I got to get that to the team. We don't need 15 different updates. I don't know why it's doing that. All right. So anyways, if you download these cards, it looks like this if you click the link. Okay. Just print and cut. Learn how to recognize and trade the top 20 patterns. Remove all randomness from your trading to build consistency and confidence. Okay. This is what they look like. So you learn how to trade a pennant. Check it out. Strength, weakness, opportunity, and threat. For the top 20 patterns. Cool, right? Yeah, my gift to you, totally for free. Okay, it doesn't put you in a big funnel where, you know, for the next 15 days you're going to get spammed stuff. No, it doesn't do any of that. Yes, Richard. Yeah, and so I said unemployment would stay the same, and it did. And I said the number would come out 212, and it came out 227. So pretty good, I think. Okay, pretty good. Not bad. I'll show you the scalping tool. So the difference between these patterns and the patterns that you saw before have to do with the other patterns were emerging. Okay. Okay. Like the other ones they're not quite there yet. The pattern is forming. So I want to know early so I can go in and analyze it and get in earlier than later because I like to front run things, right? These are patterns that have already kind of come to fruition, and therefore we know better the probability because we've seen the pattern before. In fact, I can tell you exactly how many times we've seen this pattern and how many times it's worked. And it could be like 1,358 times we've seen this pattern and 1,182 times it actually worked. So that's what, right? But by the time it's already set up, you know, there's only really a scalp left. So they're usually not big money, but sometimes they are. Sometimes these are hundreds of pips, but usually these are just pissy little, 30 to 50 pippers, right? So like 107 to 1075 to maybe 108 and a half. So that's, that's 75 to 150 pip. 76% chance probability, except I don't like CAD. Okay, but whatever. Okay, you see? And then, of course, you can manipulate this and say, give me stock indices and FTSE down, nothing else. Oh. Crypto. Okay. 80, 80, 64. All right, so what does this mean? Yeah, a scalp down, and it's already done. Okay, that's already done. This one, like hardly anything, right? Again, little scalps, right? So now I'm not interested in those. How about commodities? Gold, a rally up to 65, 50, or 26.55. All right, 26.55.67. And it believes there's an 85% chance of that. So a $20 move up to the resistance line. Now, remember, that's not necessarily the target. That's the next leg of the pattern. Oh, 85% chance of that? All right, well, it's only 20 bucks, so it's a scalp. You see why we call it scalp? Yeah. All right, let's go back and take a look at stock indices. Okay, this is weakness. Okay, well, let's do it this way. Let me just show you. Okay, strength, weakness, opportunity, and threat. Okay, this pattern exhibits weakness, but this is a threat to bears. Okay. Okay, this is good. This is good. Okay. ASX, stay away from. This is good. Nikkei. Yeah, it's somewhat bullish. The way I would trade this, like, let me zoom in for you guys. This is Nikkei, right? So the way I would look at it, because let's say I'm inherently a bull, you wouldn't be buying it otherwise. This is a bullish pattern. Okay, we're consolidating, and at some point, breakout, pull back, long and gone. And the breakout, the reason I put the breakout here is that the closer to the apex the breakout, the more reliable it is. Okay? Yeah. So really, it could be like one of these things where it's more like okay? So all this is showing you is the next leg. So when the signal came out, we were down here and it said up. Well, you've wasted so much time, you've already missed that trade. All right. So you either let it break and catch a pullback, which is possible, but less likely, or it comes down and you buy it here. Because, right, this leg is up, as you see the gray arrow, but we're almost to the top. So now the next leg is down, and that's a threat to bulls. And this is a bullish pattern. There are no bears. You have to understand that. So now the next leg is, if it's down here near 38, you're probably going to pick that up, buy at the low end of the pattern, because then the arrow will turn, so it's gray up now. The next leg is gray down. That's a threat. And then after that, once we're down here, the next signal will be back up again. And so you want to buy down in here somewhere and maybe hold, because we're even closer to the apex. Do you guys like this? Okay. Thank you, Richard. Huh? Is this good? How many people here trade gold, oil, or silver? 4 of you? All right, so should I skip it if most people don't trade gold, oil, or silver? What do the other 85 people do? What do you guys do? I guess broken fingers? Okay. All right, cool. Now, let me ask you. Yeah, thank you, Harvey. Hey, you should be senator. Yeah. Yeah. Although in America, I think that involves underage, teenage prostitutes. And I don't think you do that. So you just like a good scotch once in a while. But in America, we have different standards. That senator, I forget who it even was, but that was, who was it? Gates? Was it Gates that was appointed and he had to drop out? I think it was Gates, wasn't it? And I'm like, because the new guy that was nominated, they're like, oh man, he used to drink alcohol in the job, right? So he's like, look, I pledged you, if you confirm me, I won't drink any alcohol ever, right? I promise to be, right? Not to have a drop of alcohol, right? And, the other guy should say, well, so Gates should come out and do something similar and say, I promise all my prostitutes will be over the age of 18 from now on. I swear to God. Yeah. I mean, you got to have a policy for such things, right? Right? Yeah. Okay. Okay, right. Interesting. Right. Someone just wrote, hey, I'm new and I just found you on YouTube. This webinar alone on FX Street, I've been doing for more than 18 and a half years. Radcliffe, Rachel, where have you been? This one particular webinar, just this one, been doing for 18 and a half years. Yeah, crazy, huh? Where you been, Rach? Yeah. By the way, Radcliffe is part of Harvard, but it used to be the Harvard University for Women. Pretty awesome. Yeah, LE, I will be doing podcasts on my other channels. And I will collaborate with FX Street on that. So we'll definitely do that. Rob's been here 15 of those 18 and a half years. That's cool, Rob. All right. So we were going to talk about commodities, right? Yeah. Okay. Now, let me ask you. We're like a married couple, Rod. Pretty soon we'll share a Costco card together. Yeah. All right. Am I a bull or a bear on gold? Ethiopia. Man, we have a lot of Africans that trade Forex, huh? I need to do a whole tour of Africa. Just not Burundi. Everywhere but Burundi and Congo. Nothing could go wrong. I'm in the Congo. I'd love to. Ethiopia, I mean, man, what a powerful kingdom in history Ethiopia has, huh? They used to push around the Egyptian pharaohs. Like, man. Nigeria, the largest English-speaking country in the world? Nigeria, huh? Yeah. Oh, Tim, I've already done South Africa. It was a beaut. Joburg, lovely place. Had such a great time. I think my next visit to South Africa will be Cape Town. Ethiopia and Kenya, awesome. South Africa, awesome. Nigeria sounds amazing. All you guys have to do is invite me and pay my expenses. And I'll find time. Yeah. If there's some host that puts a big conference together and ends up making a ton of money on it because they're selling massive amounts of tickets, then you got to share some of that love with me. But if you just get a crew together and they all chip in and pay my expenses and that's it, and nobody's getting rich on it, I don't need to get rich on it. Just take care of my expenses. Yeah. So anyways, whatever. I love me in Cape Town. I've actually priced out how much it costs to take a helicopter from Cape Town to wine country. Yeah. So, yeah. Anywho, all right. Am I a bull or a bear on gold? I'll give you a hint. I've already showed you the fundamentals. And it included the technicals, it included seasonality, it included macroeconomic data. Cool. Hey, I'd go out to Jamaica, Andrew. I like Jamaica. It'd be great. I want to go back to Cuba. It'd be interesting to, zip over to Jamaica from there, and then zip over to Cayman from Jamaica. And I don't know, do a little tour, and I guess just head home. Tanzania. Yeah. Okay, I'm a bull, guys. Bull. All right, let's do it again. Fundamentals. Sorry, all these warnings and stuff that pop up, you don't get that. That's me because it thinks I'm logged in as an admin, so it does things a little differently. But okay. Somebody asked me earlier, what do I think about gold? This is what I think about gold. So I look at GDP, inflation, employment, interest rates, money supply, institutional positioning, retail positioning, seasonality, technical trends, retail sales, inflation, both PMIs, unemployment rate. I look at a lot of things, and the most important two, if I were to pick two that are most important. Okay, let me do this in bright red. Where is my bright red? Oh, I'll have to do it in dark red. Is this, okay, which is seasonality, and this, which is statistical trend. Those are my two things. Okay. The other thing is inflation's not getting better. So someone might think it's going up and might hedge that. So look, I've analyzed it through 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So, wait, is it 13? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. All right. I've analyzed 12 variables to come to a conclusion on gold. Ken, yes, I had it at 102.5, and then I got out at 102.5. So I missed that whole drop yesterday, which at the time I was crying when I bailed, but I'm disciplined, so I did what I had to do. And I figured it might be a mistake, and I kind of cried, but I have to do it. So I got out, which is discipline. If you're crying and doing your job, it's discipline, right? And then the whole thing collapsed, and then I was cheering because I ended up doing the right thing, even though I didn't want to. I did, and it turned out to be the right thing. So that's my discipline overrode my emotion, and it turned out to be correct. Wowzer. All right, so look, guys, imagine every single trade you make starts with analyzing 12 variables. I don't feel like I want to own gold. I don't like gold. I'm not a gold bug. I'm cold-hearted analytical. I don't have an opinion. I have facts. So like this little data here, 10 years of data. This is statistics. There's no guesswork. There's no opinion. Statistically, this is what the math says. The best case scenario, in the next 7 days, gold goes to $2,713.72. I don't know if that'll happen, but that's not a guess. That's a linear projection based on standard deviation of the mean price over time. Math, guys. So, that's my opinion. So now we go here. This is what we're talking about now. Okay, so imagine you started with a strategy on that. That's your strategy. You're a bull. That's it. You're done. Cool. So now I can go to settings and say, okay, under commodities, only show me gold. Let's simplify the world. Let's simplify everything, huh? Just show me gold. Do I have any opportunities right now? Falling wedge on a 15-minute. There's no other time frame that looks good. There's no pattern on a 2-hour. There's no pattern on a 4-hour. There's no pattern on a 30-minute. I forgot it does 30-minute. There's no pattern on 1 hour. There's no pattern on a 4-hour, and there is no pattern on a daily. But there might be in the future. And why would I say that? Because we have broken out. But see, I don't care about that. This pattern is bearish. Strength, weakness, opportunity, or threat. This is weakness. There's a down arrow. That's an opportunity for bears. I'm a bull. You understand? That's it. I have solid fundamental analysis. I know where I stand. I know what I'm looking for. And I'm using automation to do all the laborious grunt work. And what does it say? Oh, I'm a bull. There's no opportunity for me right now. But what if it makes a higher high, higher low? Well, then we start doing stuff like this. And later today or tomorrow, I'll get a pattern like this. And it might be on a 15-minute. It might be on a 30. It might be on a 60. Okay. It might be on a 240. It might be on a 144.0. Okay. And when that happens, now I'm long and strong. So absolutely every trade that you make will now be based on sound macroeconomic logic, analyzing a minimum of 12 variables, some of which include 10 years or more of data. And then your timing for actually executing the trade is impeccable because your technical analysis is flawless. And if that sounds good to you, let me make it 100 times better. You could do all of that with significantly less time and work because it's automated. All you need to do is execute. You now watch 7,500 charts 24 hours a day, 7 days a week. And if you know you're a bull on gold, you can just sit on this page. Let's say the only thing you traded was gold and you were a bull. So now you're just sitting here waiting for bullish patterns. Is this a bullish pattern? No, don't trade. Sebastian wants to talk Ripple. Hey, Peter DeVry, are you here? Peter DeVry? I've known Peter for, I don't know, 10, 15 years, 10 years at least. He's probably here. Peter, is he here? Anyways, Peter DeVry has been buying Ripple since it was 13 cents, maybe even cheaper. It just went to $2.50, huh? Almost $3. And he's been praising Ripple every day since the very beginning. Good for him, huh? So do I like Ripple? Not as much as Peter, but good for him. So he's part of our community, and I cheer for him every day. Dude. I mean, like, seriously. He would log in every day, man. Yeah. Yeah. Brian's our crypto guy, by the way, for traders.com. But Peter is a member, right? Just a regular member. And he was just like going ape crazy. Everybody, you need to buy Ripple. I'm like, 13 cents, that's too expensive. Yeah. Okay, yeah. I remember Bitcoin at $1,000 was ridiculously expensive, right? Okay. Okay, so Tim, he's like, hey, well, this pattern is tradable because the downside broke. Yeah, well, you can do that. I mean, again, it's your prerogative, right? So Tim, I think, is saying like, okay, we just broke out. So now what I would do if you were going to trade that is still wait for the next pullback. But I'm trying to simplify it, right? Let's simplify it as much as possible, Tim, just as an education, in particular for those that are new. Okay. You go to the fundamentals section and you don't know anything about fundamentals, but you click on gold and TradeR says you should be a bull. So you're like, okay, I guess I'm a bull. Good. That's fine. The second thing you could do is then open up this chart, okay, and look for bullish patterns. This page. I've only put trend patterns and gold patterns. For gold. Now let's put everything on this and maybe it'll give us different oversight. Maybe it's doing a bullish reversal or something. So I'll put all those back on. We go back to gold. Yeah, a lot more patterns. Is this bullish? No, not really. Is this bullish? Not at the moment, maybe the next leg. Okay, is this bullish? No. Is this bullish? No. Is this bullish? No, not really. I mean, it is and it isn't. It's kind of like, so it is and it isn't. So across the board, see how I just turned all these other things on? It still doesn't look like an amazing time to buy gold. You see? Cool. By the way, I just want to thank you for being here. Thank you very much. This is, I like doing this. And this has been a long tradition now. So it's really good to have you here. If you could please click the thumbs up button to show respect to traders, to FX Street for hosting us for these 18 and a half years of this webinar. So please, for them, out of respect, there should be, 100 thumbs up, right? Don't you think? Yeah. So anyways, that's cool. And make sure you download those chart patterns. Are they still here? Yeah. Make sure you download those. They're free. I'm not going to spam you. The only follow-up is to give you the download, but there isn't like a sequence of like 15 different emails to get you to buy something. There's nothing. It just sends you the thing to give you the file. So yeah, don't worry. And you will get reminders for the next NFP. I would suspect most of you got a reminder to log in and everything. Bone wants to know, okay, so we have a coaching schedule, for example. And I don't know how much is actually scheduled for next week at this point. Jessica doesn't have any of her meetings scheduled. Okay, so there's more than this. So on Sunday, there's a meeting at 11 a.m. Then on Sunday at 7 p.m., there's a meeting. Then Monday at 7 a.m., there's a meeting. Then I do my live stream at around 9:30 on Monday morning on YouTube. Jessica usually at 8 does one, but it looks like it's not scheduled. So, right. So there's probably one at 8, and then I do another one at 9:30. And then at 11, Peter Ward does stock trading. And then at 4, see, this is just on Sunday, Monday. I do technical analysis. So 1 hour, 2 hour, Jessica, let's say 3 hours, this one 4, this one 5, the YouTube 6, and this one 7. So on Sunday, Monday, Bone, there's 7 hours of performance coaching at traders.com. Yeah. So if you look at the past, you're like, okay, so maybe that's just, that's just that. Well, so this is where we are now, but let's look at yesterday. Yesterday, 2 hours with me at swing trading, 2. An hour with Brian, 3. An hour at the was it the New York Open? So again, 1, 2, 3, 4, 5. See, check this out. 6, because it's still Thursday. Okay, 6 hours on Thursday. What about Wednesday? Okay, ride the 5. Tokyo Open. Ride the 5. Okay, stop looking correct at 11. David Pegler, price action and trade and options too, very often. Like, so yeah, look, on a regular day, like no joke, there's 5 hours or more. Okay. Yeah, there's recordings, right? Of course. All right, coolio. So, hey, welcome to Swing Trading. Thought we could start by getting a news. Oh, did you lost my chart? Did you lose my chart? Oh, see, I got problems. I got problems. Hopefully they're not too bad. I haven't had problems all day. All right, we're back. So all I was saying here is I thought we could start by getting a news update by our news desk. Hang on. Okay, look cool, right? It's cool, right? You can skip ahead, of course. Do you guys drive down the street and wonder why there's so many road signs? Yeah, it was a long meeting, huh? Yeah. So that was a 2-hour meeting. And so you can speed it up and get past my jokes and stuff like that. Where's the crypto one? Is this it?
All right. Hey,
Yes.
We're back again. Last Thursday was Thanksgiving. I took it off. I had Thanksgiving with some of the dock neighbors here. That was quite a large curve holding for their index. So
It's cold in Tennessee.
see it a little later. I didn't get too deep in it, but it seems like it's a joint venture with Curve, BlackRock, and a couple others. And it was Bitcoin, obviously, was the leader in this. Yet, gonna rug on you.
Okay.
Stables market cap. No, I want to see 7-day change. Down sorted.
Cool, right? And the cool thing is while you're trading, for example, if you do the picture in picture,
Maybe I can't sort.
while
Maybe I
you're
have to do,
trading,
subscriber to use it,
One might
or
be-
just
it
computer
won't
lagging.
shrink. There you go. While
Or
you're
look
trading,
for
you can just have this running.
Phantom a little negative. I mean, I look for things for going down on SUI if it's already lost 6%. Kind of, which one's positive? I don't know. I don't know Noble. I mean, there's going to probably be these that I don't know.
Cool, right? You see? Dude, epic technology.
I mean, this is probably good to look. You got positive change, some funds coming to Ethereum. I do know that Tron's been making a run on some stuff. Buying.
Anyways, that's what we do, guys. Regular basis. An average day. Fundamental, technical, scalping, 5 hours of performance coaching. Oh, and 100 hours of lectures. Yeah. Yeah. That's what we do. Well, I'll tell you what. I guess we're done. Right? Like, what else is there? The stock market's opening. That's fine. I think we're done. It's a long week. I have a lot going on, and they're all good things. So thank you to FX Street for being wonderful, amazing hosts. I'd like you to join traders.com. There's a special out there. Did anyone get the email about the, I don't know. It's just a special. It's the annual price. It's the same price as the annual membership, but you pay it monthly. If you quit, you lose that price. So you're essentially signing up for an annual membership. Not legally, but essentially. You're getting the same price as an annual member, but you pay monthly. So if you're short on cash, and you get everything. Does anybody need that link? I don't have it in front of me. I didn't like prepare to show up and sell you something. If somebody has the link, yeah, I don't have it. Well, I guess if nobody here has the link, but someone here is listening and wants the annual member discount paid monthly, email me, wayne@tradars.com. Okay? Cool. And meanwhile, I'm going to spend much of the morning over here. Okay? I'm going to spend it at youtube.com/tradars. I need to change it because the live should be right here. It's not. So you go to live. Let me do that. I'm going to be over here the next
more
few
than
hours.
1% on Friday and is set to.
Okay. This is a service that has competitors. Trade the News charges, I don't know, $350 a month. Rand Squawk charges, I don't know, $200 a month. News Squawk charges about $350 a month. I charge $0 a month. Mine's totally for free. So I'm democratizing all of this. So here's a News Squawk for you. I'm going to spend a few hours over here on my laptop. I'll probably get another coffee and a cigar going and doing my work and loving life and living large. If you want to join, okay, if you want to join me over there. Oh, Denise, did you post the link for the VIP? Oh, not the VIP, the annual discount. I think maybe got blocked. Yeah, moderator, can you allow that link? Just and for everybody else, if you want to hang with me for the next couple of hours, I'm going to be over there on that other YouTube channel. Would you want to meet me over there? If you want, I'll find that link and I'll post it over on the other YouTube channel, the one I just linked there. If you meet me over there on my laptop, I'll pull up the email, I'll find the special link, and I'll give it to you so you can save $600 over the course of a year. No, Kevin, it would just be links are blocked by non-presenters and non-moderators and all that kind of stuff. So that's it. So I'll look for it, or Denise can post it on the other link. So I'll meet everybody over here for a cigar, a morning cigar and a coffee, and we can do our trading together. How about that? You want to trade the market open together? zip over to that YouTube link, and I will see you in a bit. Oh, thank you, Denise. I see the link over there. Thank you for that. I appreciate that. So everybody, thank you for being here. You're good people. I like hanging with you. FX Street, I appreciate you as well. Our 21, 22-year relationship is important to me. Peace on earth. May the pips be with you. May our profits be above average. And I'll see you over on the other YouTube channel. Have a good one, everybody. Have a good one. See you over there. Thank you, moderator.